Hey everyone, and welcome. Today, we're going to dive deep into one of the most powerful and, let's be honest, sometimes one of the most confusing reports in TallyPrime, the cash flow statement. My goal is to help you turn this from just another accounting task into your secret weapon for understanding the true financial health of your business. All right, so here's our game plan. First, we'll talk about why this report is so dang important. Then, we'll get into the nuts and bolts of how it works in TallyPrime. After that, we'll look at some cool analysis tricks, tackle the errors that pop up most often, and wrap it all up with a super handy checklist to keep you on track. So, first things first, why all the fuss about the cash flow statement? Well, it's not just about ticking a box for your accountant. This report is your crystal ball for seeing if your business has the actual cash to survive and thrive. You know, a company can look amazingly profitable on paper, but still go under because it can't pay its bills. The cash flow statement is exactly what stops you from falling into that trap. And that's really the heart of it. It's about tracking the journey of your money. Understanding this movement, the story your cash is telling, is what lets you make smart, confident decisions. It's the difference between just guessing and actually knowing what's going on. Okay, let's pull back the curtain and see how this thing is actually built inside TallyPrime. I promise, once you get the basic logic, it's a whole lot simpler than it looks. Now, this is a super important point because a lot of people mix these two up. Think of the receipts and payments account as just a simple list, a log of what came in and what went out. The cash flow statement, though, that's an analytical report. It doesn't just list the numbers, it tells you the why behind them. And here's where the magic of TallyPrime comes in. It does all the heavy lifting for you, all based on how you group your ledgers. For instance, if you get a new loan and you correctly group that ledger under loans liability, boom, Tally automatically knows that every transaction related to it is a financing activity. If you get this part right, the report practically builds itself. It's that crucial. So the key takeaway here is that you don't have to sit there and manually figure everything out. TallyPrime uses what's called the Indirect Method. It smartly takes your net profit from the P&L account and then makes all the necessary tweaks for non-cash items, like depreciation, to give you the real picture of your cash flow from operations. All right, now that we've got the basics down, let's get to the fun part, using this report to get some seriously deep insights. Because an accurate report is good, but a comparative report, that's where real strategy happens. And you won't believe how easy this is. Just a simple keyboard shortcut, Alt+C, and you can instantly add a column for last month, or maybe the same quarter from last year. This is so powerful for spotting trends. Is your cash from operations growing month over month? Is a small problem starting to get bigger? The comparison tells the whole story. But of course, in the real world, things don't always run perfectly. So now we're going to roll up our sleeves and tackle the most common headaches people run into with this report, and I'll show you exactly how to fix them. Okay, this is the big one. The question I hear all the time. You open the report, ready for insights, and it's just plain wrong. Or worse, it's full of zeros. Well, 9 times out of 10, it all comes down to one simple little setup mistake. And the solution is almost always, you guessed it, ledger grouping. Remember that table we just looked at? Your report's accuracy depends entirely on it. If you accidentally put a long-term loan under, say, current liabilities, Tally will think it's part of your daily operations, not a financing activity. That one little mistake can completely change the story your report is telling you. Here's another classic. You know you recorded depreciation for the month, but it's nowhere to be found in the operating activities section. So what gives? The problem here is all about the voucher itself. For a non-cash adjustment, you absolutely cannot have a cash or bank account involved in the entry. If you use a journal voucher but you accidentally tag a bank ledger, Tally logically thinks, hey, cash was involved, so you got to keep it clean. Just debit the expense account, credit the asset. That's it. Simple. Okay, but what if the problem is right at the very top? The opening balance is off, which means every single number after that is going to be wrong too. It's frustrating for sure, but the fix is usually pretty quick. This is really just about getting back to basics and checking your data. The opening balance on this statement is just the total of the opening balances from all your cash and bank ledgers. So, go back and double check them. More often than not, it's just a tiny typo or a number that wasn't carried forward correctly from the last year. This is a sneaky one that can really paint a misleading picture of your business. You bought a new piece of equipment, which is clearly an investment in the future, but Tally is lumping it in with your day-to-day operating costs. Why is that happening? The problem here is the type of voucher you're using. A standard purchase voucher is meant for stuff you buy and sell as part of your normal business, your inventory. When you buy a fixed asset, you need to tell Tally that this is something different, something long-term. By using a payment or journal voucher instead, you're sending the right signal and Tally will correctly classify it as an investing activity. Phew, we've covered a whole lot of ground. So to make it all stick, let's boil down all those troubleshooting tips into a simple, powerful checklist you can pull out anytime you think something looks a little off. Honestly, it almost always comes down to these three things. Number 1, verify your ledger grouping. That's the absolute foundation. Number 2, use the right voucher types so Tally knows what kind of transaction it is. And number 3, always double-check your opening balances. If you can master these 3 points, you'll have a rock-solid, reliable cash flow statement every single time. So, I'll leave you with this final thought. Getting the report to be accurate is just step 1. The real magic happens when you start to use it. Now that your debt is clean, take a good hard look. What story is your cash flow telling you? That's where the real power is hiding.